Hey everyone, welcome back to Corporate Decoder, the place where we break down the most important corporate filings. And today we're diving into Franklin New York Tax, Free Trust's latest report. Get ready because this filing is packing some serious numbers that tell a story about how this fund is doing. And hey, if learning about the inner workings of investment funds sparks your curiosity, make sure to join our Discord community, link down below in the description. We're building a great space for dissecting these kinds of documents. This is essentially an annual checkup for the Franklin New York Intermediate Term Tax-Free Income Fund. We're going to look at how it performed over the past year, what it invested in, and what it cost investors. Think of it as a financial report card for the period ending the 30th of September 2025. Let's jump right into some key financial highlights. Looking at the class of shares for the year ending the 30th of September 2025, the net asset value at the beginning of the year was $10.89. Now, income from investment operations, which includes net investment income and net realized and unrealized gains and losses, brought that up to a total of $0.2. After distributions, the net asset value at the end of the year was $10.82. This translates to a total return of 1.90% for the year. It is important to remember that these figures don't include sales commissions or other charges you might pay. For the Class R shares, the story is pretty similar. Starting at 10.80 at the beginning of the year, and with a total from investment operations of 0.22, the net asset value at year's end came to 10.80. This resulted in a total return of 5.18 for the year for Class R shares. Both classes saw a modest gain, which is good, but let's see how they stacked up against the broader market benchmarks. The fund compares itself to the Bloomberg New York Municipal Bond Index, which returned 5.09 for the same period. So, both Class A and Class R shares actually outperformed their benchmark index over the last 12 months. That is a positive sign for the fund managers. Now let's talk about the size of this fund. As of the 30th of September 2025, the total net assets for the Franklin New York Intermediate Term Tax-Free Income Fund stood at a significant $510,847,021. That is a lot of money, showing that many investors trust this fund with their capital. The portfolio held a total of 193 holdings. This size also means significant management fees. The total management fee paid for the year was $2,579,198. This is a substantial amount, but it is common for funds managing this much money. The portfolio turnover rate was 20.52%, which means the fund bought and sold about a fifth of its holdings during the year. Diving deeper into the financial statements, we see a detailed breakdown of each share class. For Class of shares, the year-end net asset value per S-share was $10.82. If you add in the maximum offering price, which factors in sales charges, it comes out to $11.07 per S-share. This difference shows the impact of sales, loads on your investment. Similarly, for Class R shares, the net asset value per share was also 10.80. The maximum offering price here is also around 10.10. It is interesting to see the net asset value per share being the same for both classes at the end of the year, even though their returns were slightly different. This can happen due to rounding or minor timing differences in share class expenses. Now let's look at the Class C shares. Their net asset value per S-share ended up at $10.86. The cost of investing in Class C shares, including sales charges, is also reflected here. It is important to note that Class C shares often have higher expenses due to their structure, which is reflected in their performance. Okay, so what exactly is the fund investing in? The portfolio composition as of the 30th of September 2025 shows that a massive 96.7% of its investments are in municipal bonds, specifically coming from New York. This isn't surprising given the fund's name, but the concentration in one state is a significant factor to consider. Within New York, there is a huge chunk, 91.0%, dedicated to municipal bonds. These are bonds issued by local governments to fund public projects, and they offer tax-free income, which is great for New York residents. Looking at the specific holdings, we see a lot of New York City general obligation bonds. For example, there is a City of New York Go bond from 2018 with a 5.25% interest rate maturing in 2031, valued at over $5.3 million. Investments like these form the backbone of the fund. Another significant holding is a Metropolitan Transportation Authority revenue bond, valued at over $8 million. These large holdings in essential infrastructure are typical for a municipal bond fund focused on New York. The total cost of all municipal bonds in the portfolio was nearly $500 million, with their current value being just over $493 million. This slight difference between cost and value indicates some of the fluctuations in the market. Overall, the total investments for the fund, including short-term investments, had a cost of over $511 million and a current value of just over $506 million. This difference, about 0.5%, reflects the market's general leanings at the close of the reporting period. Alright, let's look at the statement of assets and liabilities. This is a snapshot of everything the fund owns and owes. Total assets are over $511 million, and total liabilities are just over $1.1 million. This leaves us with the net assets of $510,847,021, which is the true value of the fund. Looking at the statement of operations, the net investment income for the year was $14,117,723. This is the money earned from the fund's investments after expenses. However, when you factor in realized and unrealized gains and losses, which were a net loss of over $4 million for the year, the net increase in net assets from operations was about $10 million. So, while the income generation was positive, market fluctuations impacted the overall growth. Investors received a total of $14,035,556 in distributions to shareholders during the year. This distribution of income and gains is a key part of what municipal bond funds offer, especially to those seeking tax-exempt income. The changes in net assets show that for Class A shares, there was a net decrease of $13,057. This means slightly more money was redeemed than invested or reinvested that year, after accounting for distributions. Class A shares saw a larger net decrease of over $1,000,000. This suggests more investors redeemed their shares than invested or reinvested. Interestingly, Class R6 shares experienced a net increase of over $8 million, indicating growth from new investments or reinvestments. And the advisor class shares had a net decrease of almost $12 million. These movements across different share classes can reflect varying investor preferences and fee structures. Finally, the report includes details about the board's approval of the investment management agreements. They reviewed the nature, extent, and quality of services provided by the manager, looking at performance, costs, and economies of scale. They also considered the profitability for the manager and its affiliates. The board ultimately approved the continuation of the management agreement for another year, determining that the terms were fair and reasonable. Now, let's put on our investor hats and look at the bigger picture. Franklin New York Intermediate Term Tax-Free Income Fund is a large, established fund heavily invested in New York municipal bonds. Its performance this past year was solid, outperforming its benchmark index, which is always a good sign. The fund generated good income and managed its expenses to keep the total return positive. However, there are a couple of things to keep in mind. The fund's heavy concentration in New York municipal bonds means it is closely tied to the economic health and political decisions of that state. Any significant negative developments in New York could have an outsized impact on the fund. Also, while the total return was positive, market fluctuations did lead to a net decrease in assets from operations, meaning the fund's value didn't grow as much as its income generation might suggest on its own. The slight divergence in performance and net asset changes across different share classes highlights how important it is for investors to understand the specific costs and benefits associated with each class. Overall, for an investor focused on tax-exempt income from high-quality New York municipal bonds, this fund appears to be competently managed and performed reasonably well in the last year. The board's rigorous review of the management agreement also suggests a commitment to overseeing the fund's operations in the best interest of shareholders. Alright. That is our deep dive into the Franklin New York Intermediate Term Tax-Free Income Fund's latest report. What do you think about the fund's performance and its heavy concentration in New York? Drop your thoughts in the comments below. If you found this analysis valuable, please hit that like button and subscribe to Corporate Decoder for more breakdowns like this. And don't forget, our Discord community where we discuss these filings in more detail is linked in the description below. Thanks for watching, and we'll see you in the next video.